Welcome to All About Stocks. My name's Alan, and yes, I just finished my Valentine's Day reminder video, and these were actually the chocolate covered strawberries I was trying to describe. However, I did horribly, I think, trying to describe them at least. But yes, I'm actually a very good cook. I'm just horribly described them. But yes, so anyways, I did say I was going to do a dividend video, the monthly dividend video. Let's go ahead and jump right into it. So I have not posted my I am not a financial advisor warning or financial advisor noticed in a while. So let me go ahead and post that I am not a financial advisor. This is just for entertainment notice so that everyone knows. And let's go ahead and get into it. So we will start with Ellington Financial and move on from there. Ellington Financial is EFC, and I'm sorry, my head itches. Ellington Financial, EFC. And when I found EFC, it was trading at $13.19. Let's see here. I'm going to move myself right here. At $13.19. And the 52-week range was trading with 324 at the low, 1876 at the high. So if you bought it at 324, I hope you loaded up and bought as much as possible, because you would have made a killing at the low, especially with the dividend at 9 cents. Because as far as I have been able to find, that dividend has stayed strong. And I believe that the low was at 2020 low. So as far as I know, that could even have gone higher. I have not checked on that here recently. So let's go on. And yes, I'm going to update this. I'm putting the Yahoo. So let's see here. So I can just click here and pull up Yahoo. So this is more from me than anything. Let's see here. So this is the average volume. This is the average volume it was trading at when I found it. This is 810, 682. This is important because as I can't talk. I lost my wording here. As the stock begins to get more popular, you'll notice that the volume begins to pick up more volume. As this stock begins to pick up more volume. I double talked myself there. As the stock gets more popular, it'll start picking up more volume. So, and I'm not going to edit that. I know it sounded a little stupid there, but let me correct myself. And if you understood it the first time, great for you. But let me explain that and correct it. So EFC back in 2020, if you'll notice, the volume was at 810. Now, when it gets more popular, hopefully and the volume could jump up due to selling or many other things. However, as the stock gets more popular and hopefully the price gets greater in value. And I'm not talking like $20 here. I'm hopefully talking, let's say $50, $60 here. We're talking maybe 5, 6 years down the road. So hopefully when we're talking about a great increase in value, so hopefully you'll notice that the volume will increase to you'll see this 6 million. And then that's when you'll see this great increase in volume. That's when you'll notice that hopefully this will also be a correlation with the price. So you can notice the price and volume correlation. And that's why I am trying to track the average volume. Now, this is just something I'm doing, but I have not noticed anyone else doing it or any other thing with Google. I have not seen any other signs of volume and price correlation. So this is something I'm personally trying to do. So hopefully I'm onto something, but there's no guarantee, but I'm hopefully onto something. Maybe there's no guarantee of it. So if there's a great sell-off, the volume's gonna jump, of course. But if the price stays steady and the volume stays steady, then the average volume and the price should be correlated. This is my theory. Now, let's continue. I just wanted to explain why I'm, following the average volume in case you're curious. So current assets currently, and keep in mind these are in thousands. So I'm just gonna go over as they were without saying thousands each time. So now all these are in thousands as I remember. Now current for is 4.2. The current liabilities is 3.3. Now that's going to give us a current ratio of 1.29. Now the total shareholder equity, that's going to be the 955. So that's good. Now when you need to start worrying is, especially with these REITs, is when you start seeing a low reduction, such as the REIT below us, is when you start kind of slipping down and when you might start getting into those negative numbers, or when you, like right up here, when you're gonna, like, you might worry about going to negative. So just keep an eye. Right now you're not negative, so you're still positive, you're still making money, so there's no concern here. Now the debt to equity ratio is a little high. Now keep in mind REITs pay out 90% to dividends. So I don't know if I would be too concerned to a high debt to equity ratio. So it's 3.48. I don't, like I said, I don't know how concerned I would be, but it's still something to keep an eye on. So now we have the return on equity is 3.62%. Now you do have some other REITs that do perform better. So if you're wanting a REIT that does perform better, you have other options. But this one is performing relatively good. Now, we do have your EPS here, and this is the EPS I came up with the numbers that I have. Now, if you go to Yahoo, I'm sure they came up with a different number. In fact, I can guarantee it because I can't match their EPS. So I came up with 0.17. Now, the previous quarter for the quarter-over-quarter revenue is $45,690. Now, keep in mind, once again, this is in thousands. And I went from quarter to quarter to quarter on all these. So this is 56,139. So from let's say this is quarter one, this would be quarter two, this would be quarter three. So from quarter one and quarter two, they've lost money. They've lost that'd be $11,000 roughly. Now in quarter three, they've lost. They made let's say $8,000. Now, if you went from quarter three to quarter one, their revenue stayed relatively the same. The question is, what turned around from quarter three to quarter two that saw them make the $8,000 gain? Now, if you look at quarter three, or quarter four to quarter three, they made about $3,000. So their revenue stays relatively consistent outside of that quarter two spike. Now, right here, I'm going to be putting the website for each company. Now, I don't know if y'all are going to want me to go over the company website. If you want me to tell you the company website, like I have the Stag Industrial Company right here. Now, I don't know if y'all want me to say the company website after I go through and just tell you the company website. If y'all do, please make a comment down below and say, hey, please say the company, or don't. And also, if I can get analysts' opinion, I can also make a statement over what I find on the analysis, and I can leave it, or I can do whatever. Please make a comment over those two things if y'all have any opinion over it whatsoever. So let's go ahead and move over to Sabine Royalty Trust. I probably butchered that, but it's SBR. Now, I found the price I found that is at roughly $30, $30.01. The 52-week range is $23.02 to $36.30. So it's not a great jump, but you're looking at a $13 jump for a 52-week range. Now the dividend is 15 cents for the monthly range, or 15 cents for the monthly dividend. Excuse me, my mouth is dry. Excuse me, sorry. So once again, we do have the average volume is at 43,000. The current assets, we're looking at 7,427. Now, keep in mind, all they are is holding royalties. And for an oil and gas holding royalties, they're only making money from the royalties they're pulling. So this is pretty good for just gas royalties. Their liabilities is 1680. So they don't have much for liabilities, and assets, they're not pulling much for assets. They're just holding royalties. It's great company for just saying, hey, give us money. It's great for a dividend play. Now, their current assets, we're looking at it's the current ratio is 4.42. The total shareholder equity, we're looking at 5747. I'm butchering that. It's 5747. The debt to equity ratio is 0.29. So the theory behind that is you want to stay 1 to 1.5. You don't want to have your debt go too. You don't want your debt too low, I guess, because you want you want to stay in a good debt to income ratio. But once again, they don't have any debt, so they're in a good position. So this right here is great for their company. They don't have debt, so they're fine. It's not in this perfect number, but at the same time, they're not in a high number. They're not beating that 1.5. So yes, it's not in that magic number, but I still wouldn't be too concerned about it. Now, we're looking at the return on equity, 211%. Most companies are striving for 15%, and 211%, I question if my math is correct. I've checked that math so many times, and it's correct, but it's it's good. So yes, if you invested early on, and they're doing great. So the dividend's doing good. Everything looks good so far. We're going to look at the EPS 0.3. Once again, I could not match Yahoo's number. This is everything that I came up with on my numbers. The quarters, I'm just going to run through them, is 9,700. We got 6,800 for quarter 2. Quarter 3 would be 8,200, and quarter 4 would be 9,900. And once again, we got the website and the analysis opinion. And I'm not going to ask y'all again. Just let me know what y'all decide, and leave the comment below. It'll be the last time I ask y'all. So let's move on to land, Gladstone, ticker symbol LAND. So when I found it, the price was trading at $15.43. I do know the price has dropped down since then. The 52-week range was trading at 961 for the low, 1928 for a high. The dividend was at 0.045, so just under a nickel monthly. But think about land. They're buying and selling land, renting out land. Now, the average volume is 371,000. Now, current assets, we're looking at 66,000. Liabilities, we're looking at 12,000, roughly 13,000. Now, current ratio, we're at 5.18. The total shareholder equity, we're at 481,000. So I went ahead and added a click. So I believe this should be showing a black click when I click on the mouse, so y'all can follow along with me. Now, once again, total shareholder equity should be 481,000. Now you can also see the math I'm using, so you can see the assets minus liabilities. That's the math I'm using, and you can also see, here's the assets, here's the liabilities, so you can see what I'm using for my math, and then you can see the formulas I'm using to get, where or get my answer. All right, so debt to equity, we got the 1.49. I don't want to be hiding anything. I want to be 100% transparent, so y'all can follow along and know that where I'm getting my formulas and my answers, and I'm also getting my numbers from Yahoo and sometimes Google. Also, return on equity, we got negative 0.11%. Now, that's concerning when you got negative return on equity. That's something that you need to be concerned about. And that should scare you off if you're if you're losing money, then you probably want to run away from a stock that you're going to lose money on. My EPS was 0.14, and the quarter over quarter, quarter one, 16,000. We got 15,000 on my quarter two. Quarter three was, we'll round up to 14,000, and my last quarter four we'll go with 12,600, and I'm just roughly rounding these. And we're just going to go ahead and call this a day. I wanted to just kind of give you all a little bit more in-depth analysis of these stocks. I haven't really gave you all an in-depth analysis of any stocks. I just kind of briefly gave y'all some dividend stocks here shortly. So I know that a lot of people are looking for some dividend stocks, but I can give y'all a bunch of dividend stocks, and I can do it all day long. And I'm going to go ahead and mark where we left off. We're gonna leave off at the Pennant Park float, but just to show y'all how many dividend stocks we actually have to go over. If y'all if y'all will leave a comment, tell me what, if y'all are just wanting me to go through dividend stocks real fast, or if y'all want in-depth analysis. I'm trying to give y'all what y'all want. Let's do it this way. I can go through these really fast. It's just I'm trying to, help y'all out. So I'm putting all these together, and I'm trying to give in-depth analysis on all these. So I posted all those, and I know none of that made sense to you, but let me see here if I can. Alright, so here we go. This is my dividend section. So all this is my dividends. So all these are the stocks that I have dividends in. And these are banks right here. I'm sorry. This is consumers, cyclicals. Yeah, speak. This is healthcare. So it's kind of just picking through it. These are more REITs. So I just got to go through and pick out the dividend stocks and then pull them out for y'all. So it's just, what y'all need, what y'all want. And if y'all will leave comments and let me know what y'all need, what y'all want, I'll be more than happy to oblige. Please like, please subscribe, and please leave me comments. I love to interact with y'all. Please have a great day, and that's it. Thank you.